What is an income statement? Why is it prepared, and what does it look like? Please keep watching this video till the end and all these questions will be answered. If you haven't subscribed to my channel, please do so and click on the notification bell to get notified each time I upload a new video. In today's tutorial, I'm going to introduce you all to a business owner. Meet Nadia. Nadia loves flowers. One day, she thinks of a brilliant idea: opening a flower shop. Nadia gathered all her savings to start her business. The flower shop is finally open for business. Nadia gets income for every bouquet of flowers she sells. However, you need to note that income is not equal to profit. Nadia still has to incur costs such as rent for using the premises. She has to pay her assistant Jill, and she also needs to print out flowers to advertise her flower shop. Nadia has to prepare the income statement to assess the well-being of her business. That is, whether it is making a profit or a loss. The income statement, also known as the trading and profit and loss account, is used to calculate the profit of a business. There are two types of profit: gross profit and net profit. Gross profit is the excess of sales revenue over the cost of goods sold. Net profit is the gross profit plus any other revenue that is not from sales minus expenses. The information that is used to draw up the income statement is taken from the trial balance. Here's what Nadia's income statement looks like at the end of the year. I will use the name Trading and Profit and Loss account in this exhibit. The trading and profit and loss account is split into two parts. The first part of this statement is the trading account part, which consists of sales minus the cost of goods sold. Under cost of goods sold, we have purchases. The next step would be to subtract closing inventory, which is the number of bouquets left at the end of a financial period. The answer we get is the cost of goods sold. After subtracting the cost of goods sold from the sales, we get the gross profit. The second part of the statement is the profit and loss account. We add other income, which is not from sales, to the gross profit. An example of such income is commission received. The next step is to subtract expenses such as rent, and the answer we get is the net profit. It is not always the case that a business will make a profit. Businesses make losses too. It could be a gross loss or net loss. Gross loss is the excess of cost of goods sold over the sales revenue. Net loss is the excess of expenses over gross profit. That's it for today's tutorial. Please give this video a thumbs up if you found it useful. If you have any topic you'd want me to do a tutorial on, please let me know in the comment section below.